Okay, let's talk about a stock that's really got people buzzing. Is this thing a legitimate rocket ship to the moon? Or maybe are we watching a very expensive countdown clock to, well, disaster? Sometimes that line is extremely thin. Welcome to D-Risk, a podcast where we provide a no-nonsense analysis of stocks.
Glad to be diving in. Today we're looking at AST SpaceMobile. The ticker is ASTS. And just to be clear, all the data we're using was captured this morning, September 22nd, 2025.
Got it. And the overall market picture, because that always matters.
Right. A quick word on that from our research. The broader market is definitely feeling cautious, sort of risk off. S&P, NASDAQ, Dow futures, they're all pointing a bit lower. So that could be a potential headwind, especially for a high volatility name like ASTS.
Okay, so let's unpack the core story here.
Yeah.
ASTS. They're building basically cell phone towers, but in space.
Exactly. The idea is to connect your regular smartphone directly to their satellites. No special equipment needed.
So bypassing the usual carriers, potentially, that's a big disruptive idea. And that's what the market's trying to price, I guess.
And lately, that vision has had some serious rocket fuel. There was a pretty powerful recent catalyst.
The trial results.
Yeah, exactly. The stock jumped, nearly 9% after they reported positive results. And they accelerated plans for their Bluebird satellites. They're aiming for 45 to 60 of them by 2026 now.
Sounds great on paper.
Yeah.
But let's talk about the elephant in the room, the valuation.
Yeah.
Our research points to, well, extreme overvaluation. Fair value estimates potentially in negative territory, is that right? Negative.
Yeah, some models do point that way. It highlights the immense challenge.
How does anyone justify a $45 price tag then? I mean, if the fundamental value might be 0 or less?
Well, that's the core conflict. To make today's price make sense, you need absolutely staggering revenue growth. We're talking north of 400% per year.
400% per year.
Per year. Basically turning a startup with hardly any revenue into a major telecom player in 3 years. That kind of scaling for space infrastructure is, well, almost unheard of.
Okay, so that explains why Wall Street seems a bit nervous. The consensus is split, right? 50-50.
Pretty much. Half say hold, half say buy or strong buy. But those hold ratings, they've been creeping up. The skepticism is definitely there.
So the value folks are probably running screaming. But the price is going up. Who's driving the bus right now?
Well, if you look at the options market, it's just screaming bullish.
Oh yeah, how so?
The put-to-call ratio, it's incredibly low, 0.38.
0.38, wow.
Yeah. I mean, usually anything under 0.7 is seen as pretty optimistic. 0.38 is pure euphoria among the call buyers.
Any particular strike price catching their eye?
Definitely. That $64 strike price is a major hotspot for call buying. People are betting big on more upside.
Okay, so extreme optimism in options. But on the flip side, the bears. What about short interest?
Ah, yes. It's heavy, really heavy. 16.68% of the shares outstanding are sold short.
16.68%? That's a huge number. That's a lot of people betting hard against it.
It absolutely is. A large, very committed group betting on a decline. And, this creates that classic powder keg scenario.
Right. Primed for a short squeeze if things keep going well.
Exactly. If any more sustained good news hits, or if the price just keeps climbing, those shorts could be forced to cover, adding fuel to the fire.
So bears are dug in, but the price action says they aren't winning right now. What are the actual charts telling us? The technicals.
Yeah, this is where it gets really interesting, because the technical picture is surprisingly unified. It's quite clear.
Unified how?
The trend, both long-term and short-term, is firmly bullish. No ambiguity there. Buying pressure, looking at volume, seems to be back in control.
And momentum.
Momentum is, resoundingly accelerating.
Right.
Seriously, everything on the chart is basically pointing skyward right now.
Okay, wow. So let's try and bring this all together. We've got these, frankly, terrifying fundamentals clashing head-on with a technical chart that is, as you said, screaming buy. How do we synthesize that? What's the overall verdict for someone watching this stock?
It's a tough call, but weighing everything, we land on a cautiously bullish outlook for ASTS.
Cautiously bullish. Okay, explain that thinking. Why bullish despite the valuation?
Because right now, the short-term factors are winning. The powerful news catalyst, that undeniable technical alignment trend, volume, momentum, it's currently strong enough to overcome the, let's call it, gravitational pull of those fundamental worries.
Okay, so momentum is king for now.
Yeah.
But those risks, they haven't disappeared, right? The gravitational pull.
Not at all. They're very real. The extreme overvaluation is risk number one. Then there's the shaky broad market we mentioned earlier. And of course, that high short interest is always lurking. Any stumble could be amplified.
So what are the key levels people should watch this week? Where's the battleground?
Okay, for the bulls, they really need to hold the price above $49.30. That was the pre-market high recently. Holding that keeps the current momentum story alive.
And the line in the sand for the bulls. Where does the bullish idea break down?
If we see a definitive break below $41.80, that would likely invalidate the immediate bullish thesis and suggest the bears are regaining control.
So it really sounds like ASTS is a classic momentum trader's dream right now.
Absolutely.
Probably a value investor's absolute nightmare. A really high-stakes game that needs very close watching.
Couldn't have said it better myself. Constant vigilance needed here.
All right, that's our deep dive for today. That's all for this episode. Remember, this podcast is for informational purposes only and isn't financial advice. Do your own research or consult with qualified financial advisors before making any investments. Thanks for tuning in. Catch you in the next episode.